Just 2-3 months ago, two different cousins, bought two cars. One bought the petrol version of the XUV 700 and the other cousin bought a Creta electric. I was involved end to end in the car buying process for both of them, including the car loan insurance and everything related to it. So, in this video, I will guide you practically through everything related to car loans. We will cover which banks are the best for car loans, what the loan process is for electric cars, and how it differs from petrol or diesel cars, what the loan eligibility is, how much amount you can get, what interest rate will apply, processing charges, documentation charges, loan tenure, etc. I will explain the entire process using India's largest bank SBI as an example because the process is mostly the same for all banks. I will try to ensure that after watching this video, you won't need to watch any other video. But before understanding all that, let's understand how a car loan actually works. Guys, simply put, when you buy a car today using a car loan, the bank pays a lump sum amount to the car dealer or showroom on your behalf. In return, you have to make monthly payments, which are called EMIs. But the bank does not give you this loan for free. In exchange, the bank keeps your car as security. The technical term for this is hypothecation. Those who have bought a car on loan, check your RC, this word hypothecation will be written on it. Anyhow, this simply means that if you default on your loan payments, meaning your EMI, the bank has the right to sell your car and recover its money. The bank generally does not do this, but we will discuss that later in the video. Okay, now that we understand what a car loan means, let's see what your eligibility is to take this car loan. Salaried employees, your income must be a minimum of 3 lakh per annum. Self-employed or business owners, your ITR income tax return must be at least 3 lakh. Agricultural activity, if you are associated with any agricultural activity, your ITR must be at least 4 lakh. If your income or ITR does not meet this criteria, you can bring in one co-applicant. That co-applicant's income will also be added. Apart from this, your age should be between 21 and 70 years. Some banks like Central Bank have a minimum age requirement of 18. Keep in mind, this requirement is for a car loan. If you are thinking of taking a two-wheeler loan, in that case, the minimum salary required is 1.8 lakh, not 3 lakhs. In addition, there is a very high possibility that the bank will tell you that to take the loan, you have to open a savings account or salary account with them. This is negotiable. Mostly the bank staff won't agree and will say it is a standard process. But if you negotiate hard enough, you can get this condition removed. In both my cousins' cases, we did not open an account. Now let's understand how much loan amount banks can sanction for you. Generally, as a thumb rule, banks fund on the on-road price. Generally, banks give a loan of 90% of the on-road price. Talking about SBI, they generally fund up to 85% of the on-road price, but it can even go up to 100%. SBI offers 100% of the on-road price in three categories. First is loyalty card loan. This is for existing SBI customers with a minimum income of 2 lakh per year. Second is assured car loan. This is for people who have an FD with SBI Bank. For this, you must have an FD of at least 15 to 20% of the car's on-road price. So if the car's on-road price is 20 lakh, your minimum FD should be 3 lakh. Third is electric cars. This offer is for selected EV cars like Tata Tiago, EV, Nexon, EV, etc. For the Hyundai Electric, my cousin got a 90% loan, not 100%. Why not 100% funding? Now, many people will ask, why does the bank only fund up to 90%? Why not 100%? There are two reasons for this. First, seriousness. When you have to arrange 10 to 15% of the funds from your own pocket, it shows your seriousness in making the purchase. Second is depreciation. A car is a depreciating asset. As soon as a new car rolls out of the showroom, it loses 10 to 15% of its own value. Now, if a customer defaults, SBI or any bank can easily recover 85 to 90% of the value of that new car. But recovering 100% will be next to impossible. Because of these two reasons, the bank typically does not fund the car 100%. Maximum loan eligibility calculation. We talked about the maximum amount the bank can give. But do you have the eligibility to take that much loan? Let's look at that too. In the case of a salaried employee, SBI can sanction a maximum of 48 times your monthly salary. So if your monthly salary is 20,000 and you want a loan of 15 lakh, you simply will not get it. You will get a maximum of 20,000 times 48, which is 9.6 lakh. Although on this salary, you should not take that much loan, but that is a separate topic. Now let's see what interest rate the bank will charge on this loan. Before looking at interest rates, you should know there are two types of fixed rates, fixed and floating. In the case of floating, your interest rate keeps changing depending on RBI's repo rate. Remember, you must take the floating rate only. Do not make the mistake of taking a fixed rate. This is because currently the RBI repo rate is at its peak, and it is expected that the RBI will reduce this rate in the future. This means car loan interest rates will also decrease in the future, but that benefit will only be passed on to you if you have taken a floating rate. In the case of fixed, your rate will be fixed. Now let's understand what the current rates are. Since a car loan or auto loan is a secured loan, the interest rates are generally lower. Although these rates change from time to time, as of June 2025 in SBI, these rates generally start from 9.20%. This interest rate is generally floating. The shocking thing is that I have been tracking these rates for the last 1 year, and last year SBI was offering 9.15%. In the last 1 year, the RBI has reduced the repo rate by 1%. So SBI's interest rate should have decreased, but instead they increased the rate by 0.05%. Also, this 9.20% is only offered to customers who have a CIBIL score of 800 plus. But what about customers with lower CIBIL? For them, SBI has provided this grid. So if your CIBIL score is 750, you will be charged 9.70% interest. Basically 0.50% more than the cheapest option. Electric car discount. I would like to mention here that for electric car loans, SBI gives a 0.25% discount. Well, it is not exactly 0.25%. Let me explain. For electric cars, SBI's minimum interest rate is 9.10%, which is only 0.10% cheaper than a normal car loan. But for some categories, the difference could be up to 0.25%. So in short, assume a difference of 0.10 to 0.15%. Anyhow, regarding interest rates, SBI's rate is quite high. Mostly it will come down in some time. But right now it is expensive. There are banks like Central Bank and Canara Bank whose rates are quite competitive. Both banks are giving loans in the 8.2 to 8.3% range. But along with interest rate, we should also look at other charges like processing charges, documentation charges, hypothecation charges, etc. Apart from the interest rate, you will be charged a standard processing fee by the bank. SBI has made slabs for this too. Up to 5 lakhs rupees 750 plus GST, 5 lakhs to 10 lakhs rupees 1250 plus GST, above 10 lakhs rupees 1500 plus GST. Apart from this, SBI or any bank imposes a world of penal charges for defaulting on EMI, check bounce, etc. Those charges are mentioned in your sanction letter, but hopefully it is better if you don't have to see them. If you pay the loan before time, technically these charges are zero, but SBI has a clause. If you repay the loan before 2 years, then in that case, they will charge a foreclosure charge of 2% on the closure amount. If you repay after 2 years, this charge will not apply. Prepayment after 2 years is fine, but for how long a tenure does SBI give the loan? In SBI, the maximum tenure is 7 years, meaning you can pay this loan in a maximum of 7 years. But guys, here is my advice. Just because the bank is offering 7 years does not mean you have to take it. For a car loan, my advice is to generally take the loan for 4 to 5 years. Do not take a loan for more than 5 years. In the case of a home loan, you can take a longer tenure because there you get tax benefits on repayment every year. But in the case of a car loan, this does not happen. Talking about disbursement, it is quite simple in the case of a car loan. The bank gives the entire money directly to the dealer from whom you buy the car, and you pay the monthly EMI to the bank. Speaking of EMI, SBI gives its customer a flexi pay option for EMI. If you have taken a loan for a minimum of 3 years, you can pay half of the normal EMI for the first 3 months. If the loan tenure is 5 years, you can pay 50% EMI for the first 6 months and 75% EMI for the next 6 months. Just keep in mind that if you are paying less EMI initially, you will have to pay more EMI later. So just because you are getting this option, it is not necessary that you have to take it. Guys, we have discussed almost every aspect related to car loans in detail here. We work very hard to bring this information to you. So if you like the video, just comment. This is the best video on car loan and our hard work will be successful. In the end, I just want to give you one tip to reduce your interest rate. Shop around for bank loans before finalizing. See, broadly the terms and conditions of all banks are the same, but there is still some difference across all banks. For example, currently the cheapest car loan in SBI starts from 9.20%. While central bank starts from 8.30%. It is possible that 2 to 4 months later, this situation might change. But as of now, it is cheaper in central bank. So you must take loan offers from at least 3 to 4 banks and compare all of them. And not just the interest rates, you have to negotiate for interest rate plus processing fees. And sure, if you talk to 2 3 banks, you will understand the whole game and you will be able to find the best deal. And that's it. If you like the video, don't forget to leave a nice comment. It gives us a lot of motivation.